Hello, thank you for joining me in the webinar today. My name is Louis Green. I'm a chartered financial analyst, certified financial planner, certified private wealth advisor. I wrote a book on retirement planning. That book can be downloaded for free at 5stepsToRetirement.com. If you have any questions or want a copy of the book over email, please email me, louis.green@savvyadvisors.com. You can call or text me, 917-590-0552. I'm happy to set up a complimentary consultation. Please feel free to share that information with friends, family, and coworkers. Let's get started. Here's the agenda for the webinar. I'll spend about 25 to 30 minutes presenting. I'll start with a brief introduction to my practice. I'll spend some time on the 5 topics in the book: financial planning, investment planning, tax planning, estate planning, lifestyle management. I'll wrap things up and tell you how to keep in touch. Please note, we do not provide legal or tax advice. Please reach out if you're looking for an accountant or attorney, as we have a network we might be able to share with you. Here's a brief introduction to my practice. My practice sits between financial planning and investment management. I believe that a comprehensive financial plan is the key to managing wealth. I pride myself on being easy to talk to. My approach partitions clients' assets based on their short, medium, and long-term goals to help keep them aligned with their personal financial situation. Growing up, I was inspired by my father, who was an accountant, and seeing the impact he made on his clients' lives. I earned my MBA, and I pursued further education, including the Chartered Financial Analyst, Certified Financial Planner, and Certified Private Wealth Advisor designations. Let's move on to tax planning strategies to implement before and after retirement. So you should be mindful of different tax strategies that are available for you. I'll share a couple of examples. When we work with our clients, we do our best to coordinate taxes and everything we do in our work with them. You should do the same. Now, here are some of the tax planning items we consider in our work with our clients, and you should do the same. Start with your tax rates. When we work with our clients, we have software that can help them determine certain strategies to use by looking at their tax returns, but be mindful of your marginal tax rate, your effective tax rate. That might help you determine which types of investments to use: municipal bonds versus corporate bonds, traditional 401k versus Roth 401ks. Does it make sense to do Roth conversions, things like that? Be mindful of the types of accounts. There are taxable accounts, there are tax deferred accounts, such as the 401k. There's tax-free accounts, such as the Roth 401k. I'll share some strategies for taxable accounts. I'll share some retirement strategies, some advanced options, and other items to consider now. Be mindful of your asset location. Asset location is simply being aware of where you place different types of investments. So most people have taxable accounts and tax advantage accounts. A taxable account is like a brokerage account. Tax advantage account is an IRA or a Roth IRA or something similar to that. I still see from time to time prospects who come in and they might have municipal bonds and IRA type of accounts, which doesn't make sense to me. But be mindful of that. So, for example, in your taxable account, consider holding individual stocks that you plan to hold for more than 1 year. If you do sell them, they're going to get taxed at the capital gains rate, which is a rate that's lower than the short-term or ordinary income rate. And you could do the same for your tax managed stock funds, your index funds, anything that gives you a capital gains type of rate or has low turnover. And do the same with municipal bonds. Municipal bonds, for the most part, are exempt from federal taxes, so you could put those in your taxable accounts as well. In your tax advantage accounts, well, there you can put your individual stocks that you plan to trade. If you do sell them, you're going to pay a short-term rate, but since they're in a tax advantage account, you're not going to typically pay a tax rate on that, or you won't pay any tax on that. And do the same with your actively managed funds and your taxable bond funds. Anything that's tax inefficient, you can put in an IRA or a Roth IRA, but be mindful of that. And we do the same in our work with our clients. Consider tax loss harvesting. Tax loss harvesting is simply the act of selling stocks at a loss to offset capital gains or maybe some ordinary income, a set amount of ordinary income on a regular basis. And we do this in our work with our clients. So let's take a look at 2 examples here without and with tax loss harvesting. Let's say you own 2 ETFs. ETF A has a value of $60,000. I'm looking at the top left. ETF B has a value of $40,000. Let's say ETF A has an unrealized loss of $7,000, meaning you haven't done anything, but ETF B has a realized gain of $10,000. So you sold ETF B. Without tax loss harvesting, you're going to have that realized gain of $10,000. And let's say your tax or your capital gain rate is 15%. You multiply that $10,000. Now you have a $1,500 tax bill. Now let's say you harvest, in example number 2, you harvest that loss in ETF. Now your realized capital gain is $3,000 because you offset the gain from ETF B with the loss of ETF, and your new realized gain is $3,000. Multiply that by 15%. Now your new tax bill is $450. So you just saved that difference. In example number one, without harvesting, your tax bill was $1,500. Example number two, your tax bill is $450. Now that's a gain of $1,050. Again, be mindful of the rules here. There's a lot of rules, so this can be complex. Please reach out to me or reach out to your accountant if you have any questions. Here are some of the advanced strategies we consider and I work with our clients. You could consider the same. There are a lot of rules for each of these strategies, so please be mindful of those rules. Reach out to your accountant if you have any questions. Start with the 529, a Roth IRA rollover. If you have an unused 529, thanks to the Secure 2.0 Act, there is a way to roll over part or all of that 529 to a Roth IRA. Again, be mindful of the rules and limits. If you have a high deductible healthcare plan at work, consider a health savings account. A health savings account provides triple tax benefits. Contributions are tax deductible, earnings grow tax-free, and qualified withdrawals are not taxed. A donor advised fund is a very easy way to make charitable contributions. You can make contributions of cash or stock. You can recommend grants to eligible charities. There's a lot of strategies that are involved there. Be mindful of that. But a donor advised fund is definitely a very popular option these days. If you have an IRA and you're over 70 and a half, there are limits. However, you can move part of that RMD or distribution to a qualified charity and avoid the tax on that distribution directly to yourself. Some of the advanced options for high earners include the backdoor Roth IRA. Backdoor Roth IRA essentially is you're funding a non-deductible regular IRA, then you're making a Roth conversion. At work, if you have the option, you can fund an after-tax 401k and do a mega backdoor Roth IRA. Those strategies are complex, so please be mindful of that and reach out to your accountant. And also a Roth conversion. If you have a regular IRA, you can make annual Roth conversions. Again, be mindful of the tax rules involved there as well. That's the end of the presentation. As I mentioned earlier, please feel free to reach out to me if you have any questions. You can email me at louis.green@savvyadvisors.com. You can call or text me at 917-590-0552 if you'd like a copy of the book. Go ahead and navigate to 5stepstoretirement.com/ebook or email me for a copy of the book. Thank you for attending the webinar. I hope everyone has a great day.